You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from a little thing we like to call around here, the old Options Insider Radio Network. 13, soon to be 14 programs, in fact, this afternoon. If you are so inclined, you can join us live, 3 p.m. Central, 4 p.m. Eastern, for the premiere of our newest program this week in Futures Options, where, as the name implies, we break down all things futures options oriented. So if you're into crude, gold, maybe something else, corn, soybeans, what have you, tune in for that one and break down some pretty cool data that you really can't find anywhere else. So check that one out. 3 p.m. Central, 4 p.m. Eastern, or indeed wherever you find your favorite Options Insider programs after the fact on demand, including probably the easiest place, the mothership, the flagship, theoptionsinsider.com. While you're there, of course, click on some headlines, some breaking news from the options market. Then, of course, surf on over some education, some what's trading, some unusual activity. We do a lot of that. And then, of course, while you're there, click on the Insider Radio Network tab, and your radio journey has begun. Of course, you can also find us wherever you find your favorite podcast programs, iTunes, TuneIn, Stitcher, so on and so forth, including the brand new, still in beta, Google Play podcast store. Google, a little late to the podcast game, but they're finally catching up, listeners. So if you're an Android user and you've been saying to yourself, how come I can't get your stuff easily on Android, should be in the Google Play store now. Check it out. Just search for Options Insider Radio Network, and you will find all of that goodness. Of course, also you can find it via our mobile app, available for iOS, Android, and the beloved Fire OS. Speaking of beloved, I'm not sure if he is, but we have him here nonetheless. I am privileged to be joined in studio by usually Mr. Corner Office. Today he's in the Corner Studio, Mr. Russell Rhodes, a senior instructor over there at the Options Institute. Mr. Rhodes, welcome to the program, and welcome indeed to the newly rechristened Options Insider Studios.
Well, thank you for inviting me into the spacious Option Insider
Spacious.
Studios.
It is.
Here in the, where are we? Near West Loop? Is that where
Beginning
we are?
of the West Loop. West bank of the river, literally. So, yes, it is beginning of the West Loop. But, yes, it is spacious because we're still figuring out what the heck to do with all this room in here. I'm sure maybe next to your corner office it pales in comparison, but still, we make do with what we have here, sir. Speaking of what we have, we should be joined in a little while by the greasy meatball himself, Mr. Mark Sebastian. But in the meantime, let's dive into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review. As the name implies, this is indeed the portion of the program where we break down the week that was from a volatility trading and indeed analysis perspective. And what a week it was, Mr. Rhodes. As we're recording this, middle of the session here on Friday, April 22nd, right around noon Central here. So most of the major indices a wee bit in the red, ever so slightly, except for the tech-heavy NASDAQ. The S&P and the Dow off close to 0.5% or a little bit less than that. But the NASDAQ leading the charge to the downside on the heel of some less than stellar earnings, off over 2% today out there in NASDAQ land. And with all this red, on the screen, VIX cash inhaling a wee bit. Perhaps not what you would expect, but also all that weekend not coming out is the equivalent of a double inhale. But an interesting day. Mr. Rhodes, you do literally have pride of place today because you are here. So why don't you kick things off? What caught your eye in this very interesting week from a volatility perspective?
So I get to go first.
You do.
What you're saying. I get to go first because
You do get to go first, yes.
It's like being,
Because you are literally the only other person here. So
it's like winning an election when you're the only one running.
yes, it's a dubious honor, but an honor nonetheless, sir.
Well, you know, it seems like we've got I personally think we've got a quiet before the storm kind of thing going on here. The stock market's chopping around a little bit, and you know, VIX did put in what is now the 2016 low, breaking 13 finally. I've been proven wrong on saying that VIX was gonna. I never thought VIX would get down to a 12 handle, but sure enough, that happened this past week. We are embarking on housing numbers, GDP, FOMC, and we've got an employment number a couple of weeks from right now. So I think maybe, you know, with earnings being mixed, although it looks like you would think that the market would be a little bit more negative related to earnings and we'd be seeing more volatility, especially as you just mentioned, that when the NASDAQ stocks, which tend to be a little bit more economically sensitive, are under pressure into earnings, you think that would bleed over to the rest of the economy. But, you know, you can't say the market's wrong because the market's always right. The numbers are what they are, regardless of whether you agree with them or not.
More sellers than buyers, more buyers than sellers. I had that beat into me at an early age when I first walked onto the SBUX floor. But you're right, it was a mixed bag. We'll get into the earnings volatility in a little bit. Speaking of mixed bags, we are joined now, better late than never, by the greasy meatball himself, Mr. Mark Sebastian.
I thought we started at 12:07 every Friday.
Every Friday, 12:07. That's the special time. We tell you, actually.
Exactly.
We tell you a different date, though. We tell you one day later, usually. You don't get the hints for whatever reason. You keep showing up. But welcome to the show, Mr. Greasy Meatball.
Yeah.
And we were just in the middle of our volatility review. Russell was just breaking down what he saw for the week that was. So what caught your eye this week?
I mean, we alluded to it yesterday on Option Block.
We did.
But
I can't imagine what you could be referring to, sir.
That print was just nasty. That was just wicked. Everyone was like, where the heck did that come from? Because the cash index never really traded there. And so I think a lot of people were a little confused by where VIX closed. That was like one of the 5 lower settles ever. Mm-hmm. And less than 2 months after a relatively high settle. So pretty impressive move. And then the other piece I'm really watching is that VVIX continues to be really stiff. The huge open interest and huge notional VIG outstanding in the ETNs, and the increase in upside calls, the open interest in upside calls is starting to really get a little balloony, just saying that people are willing to step in and hedging. willing to buy some volatility premium, and there's some trades out there. So I watched a lot of VIX stuff trade, and a lot of it's pretty action packed. Also been watching obviously the earnings, and I think that this is the quarter of the sandbag. And it was
like that.
Effective sandbagging by many a company. I would say that thematically, if you missed on earnings, you got beat a little bit. If you beat on earnings, you were very, very happy. And that's the way they're treating those. Sans the cachet cool stocks. You know, if you're a cool stock and you failed, Google Microsoft.
Is Microsoft cool now? Is Microsoft cool again?
Microsoft is cool again.
I guess, yeah. I guess they're getting back.
Think about this.
They make the Xbox. That's kind of cool, right?
Well, the Surface now
Surface, you're right.
It produces more revenue than the iPad does.
Oh, well, they sell it for about 2.5x. I guess that makes sense.
Yeah, they don't sell as many, but Surface actually is a bigger revenue source for Microsoft than Apple, and it's pretty fascinating. That Surface Pro, they are doing to the Apple iPad what Microsoft did to the Apple IIe.
Wow. Getting back there a little bit with those references. Mr. Very
Using the
classroom-like,
Playboy
Mr. Rhodes, you had your hand up, sir.
I had my hand up,
and
and you know, I'm not. I like the sandbag that Mark just threw out there, but keep this in mind: the statements that are kind of like the legally binding. Here's our earnings are always the year-end statements. So first quarter, you probably have a little bit more wiggle room with the first quarter earnings announcement than you do with maybe a fourth quarter earnings announcement. So the second Mark said sandbag on earnings, I was like, that there may be a little bit of that. It'll be interesting to see if we continue in a little bit of a tough economic environment, if they can continue to finagle good numbers.
Certainly a lot of finagling. Speaking of finagling, I don't know. It was going back to what Mark was talking about earlier. It was a bit of a contentious point this week. Settlement is always a contentious issue. Russell and I were talking about this before the show. Someone's always going to be upset wherever you settle it, but it seems like this week in particular got a lot of people's ire. I don't know, Russell, have you had people reaching out to you over there at SBUX saying, hey, explain this to me, whether this settlement? I
actually didn't hear anything from anybody about it. I did not, which is unusual.
That is unusual.
Usually when we have one that's outside of the range, I'll hear about it, but I didn't hear a whole lot about it. I think one of the things is VIX settlement, the way that VIX settlement is calculated is a little bit different it's a lot bit different than the way spot VIX is calculated. And if we had more trades on the bid side than the offer side off the open, you're going to have a lower than expected VIX settlement. Now, outside of the annual range, I think we actually did have one that was outside of the annual range in 2013 or 2014, and then eventually VIX broke that low. So this is not unheard of.
I think that the reason why maybe you're not hearing so much is one, put open interest was relatively light, not a lot out of it. But I'll tell you, going in on that Monday, my fund had the 14.5, 14 put 1x2 on, long 1, short 2, and because like we've talked about, 14's a line in the sand. Every time VIX gets below 14, it's going to pop back. So I thought I was sitting gold, and I'm sitting on a nickel credit on this put 1x2. And I'm like, boy. So it got to be kind of Monday, and I got a chance to get out at a 2-cent credit on a huge chunk of it. And I said, you know what? I think I'm going to do that. And then as the day wore on, I went, oh, that was the high of the day that I just traded. Wow. So I had to leg out of it and managed to leg out of the balance at a little better than even money, which was a huge win considering that it marked out a 7.5 cent debit. And then from there, it just got worse. The way that thing just dived was pretty phenomenal, and I was relatively shocked that happened. But actually that morning I was trying to get back into I was trying to do the 13.5, 13, And I could not get anybody to hop on board for a credit. I was like, come on, I'll do it for even money. And everyone was like, no.
You're that guy who was calling up and saying, what does everyone else in the pit have on? I want that too, and I want you to pay me to do it.
You know what we did see, though? I think your guy was somebody, maybe your guy. There were a huge amount of dime level puts bought at the 13.5 and 13 strike on Wednesday. They were buying the Mays and the Junes, and it might have, I don't remember the exact strike, but it was the Mays and the Junes. They at one point they bought a put stupid where they bought both, and then I saw the puts trade outright. They paid a dime. Might have been the 13s, might have been the 13.5s, but that was Wednesday. I was wondering whether it was maybe a smaller version of our out of the money put buyer. That was setting up some sort of near-term bearish play. Maybe didn't have the same strong signal that makes him go out and buy, 75,000 of those puts. He hasn't done that trade in a while. But I did notice that there was some out-of-the-money put buying at a dime in bulk on Wednesday.
On Wednesday or Tuesday?
Wednesday.
Oh, after expiration?
settle, yeah.
Oh, okay. I thought you were talking about the 13 puts that expired on.
No, but
on
you could have bought
Wednesday on the open.
the 13.5 puts for a nickel on Monday.
Yeah, I'm looking at it right now.
Yeah, there were a bunch of weird.
Those would have been a nice win.
Yeah.
I'm looking here, there were a bunch of little put prints, some not so little, like the June 16 puts going up 14,000 times on Wednesday. It looks like a spread with the 14, so 16, 14 vertical going up. The 15s also as well, so maybe a bit of a combo there. I don't see any really, unless there were smaller prints. I'll have to dig up.
They did I saw one trade at 5,500, but there is a real pop in activity at the 14 and 15, 14, 13, 15, and 15 level in VIX options right now in puts. Kind of trading both ways, which makes me think that maybe traders are a little more confused as to where the bottom is in VIX now. I was commenting on this I was on BNN today this morning, and
the Boston News Network.
Yes, the Business News Network out of Canada, and as I sent my notes this morning early, and then I was walking the train. I was looking through my notes, and I realized that I sent an entire page of notes and didn't mention the Federal Reserve once. So it makes me wonder.
It's a refreshing feeling, isn't it?
Yeah, it makes me wonder whether whether maybe there is we are in at least a near-term normalization.
I think it's just indicative that we're in earnings season and people are actually paying attention. We were talking about this on the show yesterday, Option Block. It's refreshing to not say Janet Yellen or China on an episode talk about Google earnings. It seems almost blasé to talk about things outside of that, but it's true. That's kind of.
Although, can we have an RIP for China of WWE fame who passed away this week?
It's been a double whammy for 80s
China and Prince
and early 90s luminaries.
It's one named people. I'm actually rooting for Madonna to be the third.
There we go. All of our Madonna fans in the audience, all three of them.
Charo, you leave Charo alone.
Charo might have a leg up in that contest, I think. I'm looking.
And I believe it's Charo.
And I see where those puts went up now. You're right. They were smaller prints. They were like 5,500 of some of these other prints, and even set prints on puts going up out there.
Yeah.
So a lot of little puts going up in weird chunks. Yeah, weird chunk. 5,800, 5,500 of the set 13 puts. People lifting offers on those for 12 cents as these guys are looking up pictures of Charo here on the desk.
I was double checking to make sure she was still alive.
There you go. See if she hadn't already aspired in the poll. Speaking of
maybe Sting, I wouldn't mind. We already lost David Bowie. How about Sting hits the Brits?
That is the other side of.
Although his real name is Gordon.
That isn't nowhere near as fun.
Yeah.
Go ahead, sir.
Oh, I was.
Oh, you were seconding his nomination.
I was seconding his nomination.
Okay, I thought that was your raising your classroom hand there.
Yeah.
Speaking of data and fun things, I know you like to track. I noticed this morning, Russell, and it caught my eye. It was actually in the Bloomberg write-up they had talking about how everyone's kind of piling into all things VIX these days. Kind of goes hand in hand with all the legions of stories we're seeing right now. We're at that level where VIX is deemed to be too cheap by the broad masses because we're seeing all the articles. That's just an indicator in and of that. How many headlines you see, is VIX too cheap? is somehow inversely correlated to the
Not
market
just the
itself.
broad masses, but the bro masses as well.
Yes, you know it's resaturation.
It's not just
point.
broads; it's bros that
Yeah.
also think VIX is too cheap.
We're offending Madonna fans. We're offending frat boys. All of our audience, one by one. But yeah, we're at another extended period, Mr. Russell. I know you like your ranges and your streaks for VIX. VIX cash printing below 20 for the last 37 straight days, the longest such streak in 13 months. So how does that? I don't know. I know you don't have your tables in front of you, but where does that sit in historical context? Would you guesstimate right now? I'm gonna put you on the spot. A little bit of hot seat.
Would I guesstimate? Oh, not very high, because we've had annual periods where we didn't go above 20.
Yes. I think I spent a whole year in the S where it pretty much hovered between around 11. I think.
We harped on that streak of above 20 for a long time at the beginning of this year, and I know I was one of the biggest cheerleaders about that. But I think the under 20, I doubt that ranks in the top 50.
I have to say, Mark, our producer is deeply offended by your comment about. I'm getting angry notes here.
Oh, I'm just kidding, folks.
About who?
Because broad, and then I said bro.
God.
No,
but it's not like bro is really.
It was the Sting comment that struck.
Okay.
Deeply.
The Sting thing. I didn't realize that Jacrati was such a huge Sting fan.
But yes, interesting stuff. And since we're talking VIX options,
I guess she'll be watching me.
Prince anyway. I'm hard pressed to think of another Sting song, or I would come back at you with one. But there are so few that are in my repertoire. I think that's a good sign. We should be moving along to my personal favorite segment, maybe Russell's as well. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
They couldn't hear it here in the studios, listeners, but I was dancing during that transition. All right, Russell.
That was the best
You know the
intro
drill.
ever,
Yeah.
because, like you just said, I was here and I didn't have to listen to it.
So I know a lot was printing out there weekly
Yeah.
this week. So what caught your eye, sir?
There are different things at different strikes. It's kind of a spread, or different expirations. It's kind of spread out between now and the standard May expiration. On Thursday, we had somebody selling the 14 puts and buying the 15 puts that expire next Wednesday on the open. They were paying 94 cents for the 15 puts and taking in 34 cents for the 14 puts, costing them 60 cents. If we get another settlement under 14, they're going to make a 40-cent profit on that one. And then on Tuesday, we had somebody looking at the May 4th options. This is taking the other side, because it takes buyers and sellers to make a market. We had somebody buying the May 4th 18 calls for 45 cents and selling the 21 calls for 17 cents. Quick math in my head, 28-cent cost, and they could make almost 2 cents. They can make 272 if we get to the highest VIX that we've seen in some time.
Yeah, that May 4 one, that was the area where I wanted to sell puts so bad because of non-farms.
And then we've got, that one, but that one's actually that's an expiration before non-farm payroll.
Oh, wow.
May 4th.
Even better.
Yeah. And then somebody came in and bought 5,000 of and this was a while back, in taking advantage of the constant contango drift. I don't know how else to say that. The contango drift. We had somebody buy the May 11th, 5,000 of the 15 puts and pay 52 cents for them back 2 weeks ago today on April 8th, and those things are 70-cent bid right now as we stay in a low volatility environment. So, I've always been a big fan when we're in contango, if you think volatility is going to stay low, of just buying put options. Yeah. And now with the weeklies, I thought that would be a way that some people would take advantage of weeklies, and we're definitely seeing it.
Yeah, we talk a lot on this show all the time. We're going to get to it a little bit later. Upside VIX calls, 1x2s, all these ways to get upside in VIX. But you're right, in this kind of environment, and some of the paper maybe, as we just talked about, maybe waking up to this fact, near-term downside puts, not exactly the worst play. And our friend there, sitting 70-odd cents to the good, he's laughing all the way to the bank on those.
Trade.
We'll talk about a little bit later some of the hot strikes, too. We still don't see puts lighting it up to the total. We see little trades going up here and there, but still, you're right. They don't get to the love As we're talking right now, VIX hovering right around about 3.5 to 1. Calls over puts also indicative of perhaps where that media environment I was talking about earlier are things getting a little bit too cheap. You know, VIX has reached this kind of unique saturation point in the marketplace. I was talking about this with Russell a little bit earlier before the show too, where a couple of things catch my eye. First off, whenever it hits these levels, it's like they just hit print on these articles they have queued up already. Is VIX too cheap? Because they hit en masse across the board. But Mark, I've also seen this too, which is kind of nice, maybe indicative of the evolution of the audience a little bit. A lot of these articles, they always cite things. They'll talk about VIX cash, talk about VIX options, usually talk about VXX as well. And in the past, they'd have someone coming in and recommending maybe buying and holding VXX or things like that. You see less of that now, A. And B, even in the article that I did see where someone mentioned that he's been holding VXX since the beginning of the month, which is a little bit longer time frame I think you want to hold that. They say in the next paragraph of the article, by the way, this is a vehicle that's designed for essentially short-term trading. So it seems like people, maybe the editors, maybe it's the reporters, maybe it's both, I don't know, are waking up to some of the more nuances of this space. I think that's actually a good thing. So, because you don't want Aunt Agnes from Iowa going out saying, I think VIX is cheap, loading up on a ton of VXX in her IRA and not looking at it again for the next 2 years.
So, I want Russell's thoughts on this. I got into a real good discussion with our boys over at Typhon, the Thompson twins. And, we were talking about the massive notional Vega outstanding in the ETNs. And we were kind of discussing the effects that kind of an increase in VIX would have on the VIX futures with that notional Vega outstanding and all that huge open interest. Right now, the ETNs, this is from Matt Thompson. He's been tracking he started tracking it. He basically said that the ETNs are accounting for 80% of the open interest in the VIX futures right now, according to his modeling. And so the question is, with them having that kind of a crazy open interest and notional Vega outstanding, if we do get a pop in volatility, one, because they already have so much of this on, what's that going to kind of do to how the term structure trades itself? When between rolling and some things like that, and what is that going to do? And how do you think that's going to affect VIX futures movement? Is that going to make it more volatile or less volatile than we would normally expect out of, let's say, a 2-point move in VIX or a 3-point move in the VIX cash index?
Well, first off, and I got to talk to, it's Matt, because I think Matt Thompson sent me an email about it. And we had breakfast last week, and he didn't bring this up. So I'm hurt that he's confiding the really good stuff with you and not me.
Wait a minute, you had breakfast with him and I wasn't invited?
At Pages.
What?
I know. I knew that would.
What a load of hooey!
I love that I got to just upset you like that.
You're going down, Matt.
So he didn't bring that one up, but and I'm going to run some numbers while the other guys are talking, and check Matt's math. Sorry, Matt.
We better pull them in next week.
One of the things to keep in mind with the ETNs is the ETNs don't necessarily have to hold the futures. They don't have to have the position. They just need to have the ability to make good on whatever performance you get from the index that VXX is based on. Now, UVXY and SVXY, those are ETFs, so they do actually have to hold the futures, but one is double long and one is short, so there's some offsetting going on there as well. The Barclays people, they're never going to fully admit how they're replicating on their end the performance that they're supposed to be getting, or you would get from the index that underlies VXX. So I'm not sure that it's going to have as much of an impact on the futures as you would believe, just because of the size. And then also, I don't think it's going to necessarily have as much of an impact on the futures just because there are lots of other people that are playing in that market. And I can't imagine that even if everybody's bailing out of VXX, selling their shares because we get some sort of spike in volatility, that it's going to have much of an impact on the actual futures.
Yeah, well, all right, so here would be my question. All right, let's say that there's no change in open interest or anybody bailing, and we get a pop in vol.
Okay.
All right. How is that going to affect, obviously they have to roll, and let's just say that they are carrying a lot of this position that they have to roll. How is that portion going to? How do you think that portion would affect term structure?
You mean the rolling part?
Yeah, I mean, do you think that will cause some maybe excessive flattening or excessive steepening in a?
Well, if anything, it would. If you're talking about huge size, it's going to make the curve steeper, not flatter, because they're selling the front month and buying the second month. But again, we haven't really seen in the whole history of these things much of an impact in the change in the way that the futures act.
Is that because of the TAS? You think
the traded settlement process that these guys get to use? That's more about squashing some of the market noise at the end of the day each day, and that's been very successful. But I think traded settlement has also made certain that there's no impact on the VIX futures curve that comes from the ETNs.
Yeah, although you can tell which way the traded settle is going based on what the futures will do at the day. I think, don't they quote the TAS a couple of times and then, don't they come out with kind of here's what the current TAS level is and that actually produces throughout the day, and then you can kind of tell which way they're going. Do you last question, then I'll let us move on. Sorry, I don't mean to be giving Russell the
Hey, we're all in the same room. That's what happens when everyone's in the same room together.
I think the audience probably cares about that. So we just kind of talked about this traded settlement. Is there a place I can go on CBO or CFE.CBOE.com or CBO.com to kind of see where TAS, what's going on with the traded settle, or where I can get it quoted? How do I find that information if I'm involved in the ETNs or I'm involved in the VIX futures or VIX options and I want to see where that's trading?
I don't know if it's actually disseminated anywhere. I've never gotten that question before. My impression was that you entered into traded settlement trades throughout the day, and you just knew that you were going to end up having the settlement price as your final price for the transactions that you're entering into throughout the day.
One last bit of news here on the VIX front before we get into all the other activity that's been catching our eye of late. We mentioned on the last week's show, and it's actually started this Monday, was the disseminating of the VIX going to be available essentially overnight now. It's going to be every 15 seconds, started publishing and disseminating this Monday between 2:15 a.m. Central Time. So between 2 and 8:15 a.m. Central Time, essentially, Monday through Friday. So all you out there who've been lamenting, hey, why can't we get our VIX throughout the rest of the night on our own schedule? Now you finally can. You're getting those prints a little bit slower, but still 15 seconds should do you throughout the overnight period. And looking back at the week that was from an overall perspective, we touched on it a little bit earlier. It was an interesting week. One day kind of leaps off the charts. That we'll get to that in a second. Today, a little bit light so far, about 120,000 contracts going up in the VIX options as of about 12:30 p.m. Central or so right here. Yesterday, also fairly light, about 380,000 contracts. VIX averaging, as of usual of late, about 600,000+ contracts a day. Wednesday, about 776. And Tuesday, the day that really leaped off the charts, 1.4 million contracts going up. It was indeed the return of our old whale friend. We'll get into some of that paper in a little bit. Monday also fairly robust, about 753,000 contracts. Also, we had, as we mentioned before, the contentious settlement that usually drives some paper middle of the week as well. So all that combining for a decent spike in the middle of the week, if a bit of a quiet period here towards the end. And let's just get into it now then, because there was a lot of paper that caught our eye this week. But let's get into that Tuesday one first, because that was kind of just really the mega trade. If you've been listening to this show for the past year, listeners, you know we detailed a lot of activity about our old 1x2 friend out there in VIX land. It was the short one, long two. So that kind of ratio approach, kind of managing your near-term exposure, waiting staying at the table long enough to get your swing at the fence for that big pop. And if you listened to the show last year, you know this trade was going up once a month. They were rolling monthly, and it was doing all right, make a little, lose a little, all the way from about April all the way till about August, when, if you saw what happened in the market in August, this trade really knocked it out of the park. Then, understandably, they kind of went away for a while, because I would too if I was sitting on that much on that trade going away. Then they kind of came back earlier in the year here. And now they're playing the roll game, which is kind of interesting. Also, I think maybe the term they chose was a wee bit interesting on this one as well. Russell, I know you wrote this up on your blog as well. This one caught your eye as well. Kind of hard to miss this one. So why don't you, since you spent some time illuminating this trade on your blog, why don't you illuminate it for our listeners too? In addition to maybe it seems like they're skipping a step this time, not the usual formula here.
They've skipped a step a couple of times. It was I went back and first off I went down on the floor and talked to the guys about it a little bit, and it's been the same person. At one time they were actually selling the 22 strike calls and they switched to the 30 or to the 23s. What they did, if you break the thing up into the two components, they got out of the maze. And normally, if you go back and look at the history, normally they are getting out of the front month on the first or second day of that month. It normally had been like February 3rd or January 2nd or January 4th, I think, maybe. And they did it a little bit earlier than they normally do, which I found interesting, which might be an outlook that they don't think much is going to happen in the volatility space. They had a chance to take in a 9 cent credit on what they were rolling out of, which they did get into that May. They got into that position at even. And when they got into that May position, they were rolling out of March. And when they rolled out of March, they took in, I think, a 22 or a 23 cent credit, something like that. And they had gotten into the March at even. So it's continuously...
They're doing well.
Yeah, they're doing fairly well with it. They got into the 23... 30, and we're just going to make it around buying 100,000, selling 200,000. They bought 100,000 of the July 23 calls for $1.50. They sold 200,000 of the July 30 calls for 75 cents each, and they are in that for even money. If they follow the previous pattern, they'll get out just before the 4th of July. If maybe they've got a different thought behind it, they may roll earlier as well. And then one last thing on it, I think maybe in January was the last time that they rolled, and they only rolled forward by a month. But they've now started, for some strange reason, they seem to be rolling forward and skipping a month, at least the last couple of times.
You know, I think if you look at the back end of the curve, it's pretty juicy relative to, the way the pattern the VIX futures have been the last few months has been that front month is super juicy. The spread between month 1 and month 2 is maybe a little too tight. And then the back month stuff up beyond month 2 has been a little meaty. Mm-hmm. And so, we were looking and July, August as a time spread, a calendar spread in the futures, it looks kind of favorable. I mean, a lot of that stuff is juicy. So this guy is a different guy than he's flipped around his strategy, right? He used to buy one, sell one and buy two, and now he's gone. Is this a different one that's buying one and selling two?
No, this is what they've been doing.
No, it's the same thing. Yeah.
All right. What about, wasn't there the guy that did the 380 buy?
Well, that was
a different trade.
There was a different type of trade, and they had another leg to that.
Yeah.
And that one, I feel like they had some sort of an upside kicker to that one, which probably worked out all right for them in August, and maybe that's what they were playing that thing for, was some sort of volatility spike, and then they finally got it. And
these 1x2s
it's like winning the lottery.
Yeah. These 1x2s are great unless things get kind of super ugly.
Right.
Then they turn into a complete nightmare.
And based on recent history, 30 is a pretty safe strike.
It is, and this guy's safe out to 37. $37. The only, what of the settles that have been above 37? We haven't had one since 11. I haven't really had one since 2011, and then maybe a few in 2008. So you're right, relatively rare.
Yeah.
But still, it's still a little bit of playing with matches, just an itty bit if things really, really blew up. Now, the piece that's actually moved into the guy's favor is that because this activity is really heated up in VIX options and VIX futures, and it's become its own asset class. You can make an argument that maybe it's a little less spiky, or at least the futures, and they're going to move a little bit bit differently relative to August. But if these guys had been in that trade in August, they would have had they got out. If they'd been a couple of days late rolling back, they would have had a lot of problems in August.
Yeah, this definitely speaks to timing a bit on this one. But that kind of gets back to what we were talking about when we did the RMC shows as well. One of my favorite panels there was, I forget her name, Russell. You always remind me of the speaker there who talked about. She essentially she essentially sat down and talked about the efficacy of that 1x2 in different periods and different types of structures of the term structure, the VIX futures, when it works better, when it doesn't. And it's it's a remarkably simple trade, but it has worked, as we've seen, to great effect if you do it well, if you have the good timing, obviously, and also put it on in scenarios. There are times definitely when that's more favorable than less. But it's kind of,
for sure.
It's certainly an interesting one for a lot of people. They conflate VIX as this extremely institutional, extremely complex product, and certainly there is a lot of that out there. But you don't need to have crazy reverse ratio iron condor swaps on a daily basis versus some sort of OTC variance to make any money in VIX. You could take this approach and replicate it on a smaller fashion, even as a retail guy, and as long as you do it on a savvy basis.
Put on a back spread. Yeah, it's not bad.
It looked like somebody replicated this trade the day after, too.
Yeah, I was going to get to that, too, because we did see similar prints on a Wednesday of not exactly the same thing, but success breeds competitors and competition and copycats.
Hey, well, if you're the first one and then somebody comes back and does the same thing, you're loving it.
It was kind of hard to miss this trade all of last year. It was the single biggest print pretty much on any given month. Whenever you see VIX spike over 1 million contracts, you knew this 1x2 was going up and they were rolling it, and to the tune of 300, 600,000 contracts, whatever they would do on a monthly basis. So if you were at all paying attention to VIX or indeed listening to the show, it was kind of hard to miss this trade. So I'm surprised quite frankly there aren't more copycats out there doing this exact type of trade, because you're right. It worked right when it needed to. And you know what? You
need this type of volume. This is the type of volume that will normalize the skew back so that the hedgers can come in and actually still use the product. So these are really, people look, they're very beneficial. The fact that 3 years ago, before VIX, the other back spread, the short 1, long 2 blew up, you could typically go out 60 days and do the 1x2 for 5 points for even. It's kind of expanded to 6 and 7 now. These guys coming in and slamming that thing, it's going to hopefully push that skew back toward, being able to do the 1x2 for closer to even money at 5 points as opposed to 7.
Maybe she also skipped a month too, because VIX traders are not foolish. You keep doing that same thing over and over again, they're going to fade you. Maybe they didn't count on that trader going out one extra month, and so that was for whatever reason the more favorable setup. Either way, it's interesting to watch that one going up again, listeners. So if you've been in the camp of wondering if it's time maybe to pull the trigger on that trade, maybe something for you to certainly look at the paper and evaluate for yourself here. Moving on to what else has been lighting it up out here in VIX land over the past week or so, and indeed right now. Not surprisingly, the whale does it have some impact on the hot strikes, but there were some other things trading this week. Our top 10 for this week, starting off number 1, pretty much leading the charge by a mile. The May 25s, go figure, about 350,000 contracts open there, then down to the June 23s, 317,000. We fall off a bit of a clip, about 100,000 less than the number 1 spot. This is the July 30s with about 256,000 contracts open there. The ever optimistic July 30s down to about 244,000 for the number 4 spots on our hot list, with the May 30s, then down again to the May 22s. Again, all of our trades we were talking about earlier, 220,000 of the May 22s open right now. Then we fall off again to the number 6 spot with the May 20s, 180,000 contracts. Similar numbers for the May 23s and 174,000 for number 8 of the May 28s. All calls this week, which is kind of interesting, even though all that little put paper we talked about earlier, none of it amounting to enough to fight its way onto the hot list here. Number 9, the AUG 30s, also ever optimistic AUG 30s. 166,000 of those bad boys opened this week. And number 10, the 30 strike seems to be the strike du jour this week. The June 30s also lighten it up to the tune of 136,000 contracts open. About 6.8 million contracts outstanding, about 5.3 on yield calls, about 1.5 million on the puts. Some other headlines before we move on to some other products really quickly. Some of you asking about this SEC extending its period to curb what they call U.S. market volatility, a.k.a. the circuit breakers. It's done a bang-up job so far, but these are effectively, they're just extending the pilot program for those circuit breakers listeners all the way out to April 21st of next year. They also added a few more tweaks. Also gives them some more time to crunch the numbers on how well their program worked from August of last year. They still haven't really figured that out either. And they're also making some changes, as you might imagine, to ETFs and their way they're impacted by the circuit breakers, as a lot of pushback from a lot of these ETF providers like BlackRock and others saying, hey, our products really were disadvantaged in that environment. Maybe they need separate types of circuit breakers to curb their quote-unquote excess of volatility. Some of those getting cut by a third or more back in August of last year. Moving on, some other things that I know are probably catching a lot of your eyes this week. We've been talking about a lot of our other programs. It is indeed earnings season. A lot of big names firing off this week. We saw Google, we saw Goldman, Intel, my old stomping grounds, Beamer, they formerly stayed, Beamer, Microsoft after the bell last night, Netflix as well earlier this week, Southwest, United Airlines, even the much troubled YHOO coming out this week, Verizon talking about buying them, of all weird things. But I think last night was kind of the big day for a lot of people, Microsoft, GOOG, and good old SBUX. By the way, Russell, I haven't had a chance for you to chime in on our options question of the week this week. We priced it up at the start of the week on Monday. They were pricing in about a $39 straddle on Google. We all know how the actual number came out now, so I won't make you guess that. But I had our listeners guess. I said, hey, where do you think Google's going to what do we give them? We gave them, is it going to blow the doors off that $39 straddle? Is it going to mildly outperform, slightly underperform, or dramatically underperform? What do you think won our poll, sir?
Dramatically underperform, right?
Yeah, you'd wish. I guess apparently there are no premium sellers in our audience, because that didn't get a single vote. It was blow the doors off, 35%, and the winner was mildly outperform, about 46%, which was looking good for a while there last night, because it was right at that level. Yeah, then it kind of just then we reverted off that. Slightly underperform, 19%. So yeah, our listeners apparently diehard premium buyers. Who would have guessed?
You push people so hard to stay away from earnings and don't stand in front of earnings. You've got them so scared, so they're picking the other side of that one.
Yeah, it was interesting. But of course, we had Softy last night as well. Another interesting one. That one was kind of a dead money for a long time, unless you were a premium seller out there. Then it kind of was a decent premium harvest around earnings time. Last year and a half has kind of changed a little bit. Last night, kind of getting back more into its old kind of ways. Good old SBUX as well. Any of these earnings names catching your eye from the week that was, Russell or Mark?
Yeah, Microsoft was down as much as 10% and just got smacked. You know what industry actually had its volatility absolutely collapse right into earnings and then blew the door off the straddle was all the airlines. Really? Delta came in and had pretty pedestrian earnings and rallied a little bit. Then UAL came in and absolutely, I was about to say a curse word, absolutely dropped a brown trout on earnings expectations, and then AAL followed suit by doing the same. The AAL May 41.5 straddle, which is where AAL was trading Wednesday before UAL announced, went out $2.80. The stock's trading about $38 right now. And vol is significantly up from there. So if you look at a chart, I mean, they came in and just smacked vol in this name on Monday and Tuesday. It was just an absolute scoop. The AL trade as low as 37.5, I think, 37 this morning. So they came in and just crushed Airlines, where was really the one that I saw that really outperformed things. And then, like I said, Microsoft off 10% at one point, has since recovered.
Yeah, you said softy. That was an interesting one. Like I said, that was kind of a staid name for a long time, and it looked like an initial blush when we were watching on Option Block last night. That was going to be kind of another resounding meh out there in Microsoft land. And you're right, roaring out of the gate towards the end there and into the open this morning, off quite a bit. As we're recording right now, off about 4 handles or about 7.5% or so. This is the name they were pricing in. About 240 or so last night, so a little over 4%. So dramatically out. If we had done a poll on this one, I wonder what
everyone would have said underperform.
Everyone would have said dramatically underperform on this one, and he would have been right 9 times out of 10 historically. And these are one of the few times.
It's cool again. So
it's the surface numbers; they weren't up to snuff.
Look at the last earnings. Look at that nasty move. Oh, that's in February, so that doesn't even really count. But Microsoft is. The one that's now boring is Apple. People used to love Apple. I don't think you can expect much out of it. I think that's a stock that is not a growth stock. It's an income stock, produces cash. The next week's straddle. What's your over? Apple's trading right 105. I looked at it this morning. Don't cheat.
I'm cheating.
Where do you think that next week's straddle is right now?
He's cheating already. I like you admit it. That's well done, sir.
I'm cheating. So
you ain't cheating, you ain't trying.
That's right. That's a NASCAR phrase. So about a 5% move.
I love it.
They're looking at about a $5 move.
Yeah.
Less than 5%. Eating ain't cheating. Just remember, eating an apple ain't cheating. Eating ain't cheating. And so the market is expecting underwhelming movement in its entirety, and huge no thanks.
Yeah, this is kind of, you're right, it is a little bit of a flipping of the script. I'm sure we'll see different straddle pricing for softy next quarter as a result of this past performance. And yeah, you're right, Apple not really pricing in much of anything out here this coming, certainly compared to the go-go days when you had to have it. Interesting stuff out there. And you're right, also, some of the interesting developments out there. Will Microsoft recover from the PC glut? Will the Surface be enough? Will things like Xbox or whatever else they're working on, will that be able to save them? A few more interesting stories going on than will they sell more iPhones in China right now?
Office, yeah. Right, there's a lot of interesting stories. Apple, yeah, they're an iPhone. Everything else fails.
Yeah.
Or
they do well out of the gate and then they slowly
iWatch.
Underperform like the iPad.
The iPad is dying. The computer business is nothing. The watch is an utter flop.
And there are those ultra-conservative people like myself that will never buy an Apple product again after they fought with the government.
There we go.
There are a lot of people. I'm not alone in that one.
Let's get
Make America great again.
Let's get political on the show.
Yeah, no. It's not even the question is that ultra liberal or ultra conservative? If you're libertarian, you're
How
not.
do you feel about those laws in North Carolina? Well, let's go big or go home. Let's move on.
Let's
quickly.
talk carbon tax in Washington.
Let's move on quickly.
I do want to point out that Apple hasn't had a double-digit percent move off our earnings in over 3 years. So the excitement is is gone.
It's like
the love affair is over.
The thrill in Chris. Who's the guy for MSNBC that had the thrill in his leg?
Oh, the tingle up your leg.
Yeah, the tingle up the leg is gone. I could write a negative story on Apple, and even the fanboys don't come after me anymore.
I don't know if they're out there anymore. I haven't looked, but I think the best gauge of the zealotry in Apple, not just the straddle, obviously, but see how juicy those calls could be, and they're nowhere near what they used to be, and that's probably the best gauge right now.
It's got to. If you look at the SKU structure, it's no longer. Apple for 4 years had calls more expensive than puts, and that's gone. And that's an important thing to recognize, is that basically means it's a normal stock again for the most part.
Yeah, the zealots have moved on. They're in Tesla now. They're in gold, as they always have been, loading up on GLD and a few others. Speaking of gold and the commodities, we can hit on a few of those here while we wrap up the volatility review. Crude oil, we'll start out there. An interesting one to watch yet again. The will they, won't they dance. Everyone was kind of girding for some big development coming out of last weekend's meeting. Didn't really see perhaps the huge movement that a lot of people expected as a result. So there was some interesting movements out there. OIV, OVX, both hovering right around, about a 43, 43 level right now out there. So clearly well off recent highs in the mid-50s, obviously indicating, at least for the near term here, the expectations of dramatic movements coming in a little bit. Looking at the skew chart out here in all things crude oil, courtesy of our friends over there in the land of quick strike, and puts are again leading the charge, even though near term the calls have more juice. And we've been talking about this before on the show. It seems like oil has reached somewhat of that inflection point where the calls have certainly more life than they did a couple of months ago. When you could there was no reason to sell an upside call anywhere because there was just nothing to it. If you were bullish, you could buy all day long and get it for fairly decent levels. That's changed a bit now, so that is the worm hasn't turned completely. It's not like calls are bid all day long, but we are seeing more life to those out there. And also looking out there in the metals land, the precious stuff, looking at from the realm of GVZ, aka the gold VIX, hovering right around a 17.5 or so level right now. Well off indeed, just like crude, well off its recent highs back in mid-February where it spiked right around the 28 or so level off there. So nearly coming off half of what its levels were back in February as well. And of course, we're also, speaking of skew earlier, we're also retreating from that period out there where you had to have every freaking gold call on the planet, and people have come off that as well. The skew indicating a little bit more sanity out there. Some concern. We've obviously had some retracements to the downside in gold recently, so clearly people perhaps positioning out there as well. Turning across here in the studio, what's been catching your eye out there in either the shiny stuff or the Texas tea from a vol perspective?
Well, not necessarily from a vol perspective, but I mean, what in the world's it going to take to make oil go lower? And it was 6-9 months ago, we had exactly the opposite environment where you would hear all this jawboning going on where they're trying to push the price up, and they couldn't manipulate it up. And now, regardless of what kind of negative news you hear, they're not pushing it down. Both gold and oil from the option perspective is kind of balanced at this point, which you just ran through quite eloquently.
I mean, I think
I got the big bucks.
I think oil's due for a time correction where maybe it kind of sits here and the 50-day catches up, the 50-day moves up, the 200-day moves up. All the technicals that Russell
reset
follows,
all the data points.
All the technical analysis that Russell Rhodes is addicted to catches up to where oil is now trading. And I'll tell you where I think the one thing I'm really watching for a die is OVX and OIV. I think 6 months from now, those will be trading near 30, not near 45. When I look at oil, every 1x2 I look at, I want to put on, but long one, short two. In terms of puts, if people want to buy puts around the 35 and the 30 strike, I'll do that 1x2 all day.
A few of those.
And you look at the price level, and I think the assumption is a lot of American production is coming off. And even some of the overseas production is at least flatlining, and then we're seeing some increase in demand out of Europe and some of the areas like that, and that's kind of a driver, and that's why we have a bigger buildup of supplies now than we did 3 months ago, and oil is $20, $15 higher. That's because markets try to be forward looking and not backward looking, and the answer to low prices is low prices in all commodities. That's the thing to remember, folks. Gold, on the other hand, like I said, if you like gold, you might as well buy Alcoa because you're going to need a foil hat.
There we go. I think we'll leave the volatility review on that. We got a few more minutes, listeners. So let's get really quickly into the moment where we all disagree vehemently. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, that music means it's time for our final segment. I apologize, listeners, we went a little long in the vol review, so no time for your questions this week. We'll get to more next week. Don't worry.
Don't apologize. It was a great discussion.
It was a good discussion. I agree. I always feel bad if I don't get the listeners in every now and then. But yeah, moving on here to our final, most precarious portion of the show where we attempt to divine what those ever fickle volatility gods hold in store. Last week, Mark and I kind of flip-flopped because I was feeling a little more vol love. He was feeling a little bit less. So we kind of just flipped places. He went to the 14 level. I went to the 15.5 level. And Russell was swinging for the fences from a vol perspective. You were feeling 17. I think all of us were surprised when it hit that like 12.
He's only 17.
When it hit that like 12 half print earlier this week, all of us were kind of like, wow. I think all of us were exceedingly optimistic. This late in the game rally from a VIX cash perspective, Mark, has put your approximation in a little bit closest stead. So you're 14. We're right now as we're recording, we're printing right around 13.8 or so. So we'll give it to you this one. So that means you get pride of place for next week. You were the least over optimistic amongst us.
Yeah.
Price of right rules, we all lose.
Right.
But aside from that, sir, so what are you feeling going forward?
I'm gonna get. You ready?
Who's ready? I'm ready. 25. Are you feeling it?
13 and a half.
13 and a half.
I'm going to go lower, not higher.
1/2 tick below where you are.
I'm going to go even half tick lower than where I settled last week.
All right. So you're not the lack of your 1x2 your put spread out there has.
I'm going to set that thing up next week, and it's going to be a home run, folks. Look out. When you see that 500 by 1,000 lot trade, just know that's me.
There you go. Talking up the position all day long here.
Talking up my book. Talking up my book. My outlook's my position.
All right, Mr. Russell, you were swinging for the fences last week. You thought, a lot of the earnings were going to maybe inject a little bit more lifeblood. I was kind of leaning. I wasn't as aggressive as you, but I was kind of leaning a similar way last week. I think we were all surprised that these earnings haven't really done as much as they have. Where are you feeling for next week?
Anything that you say plus a penny.
Oh, you're doing.
I'm playing the game. No,
I'm
gonna go 16.
16, a little bit lighter, huh?
Dialing it back a little.
If Mark Sebastian's going down a little bit, I'll go down.
Dialing back the optimism.
Yeah.
All right. So then, if everyone's dialing off, let me see. Where was I last week? I was at the 15.5 level. Clearly, I was ever so optimistic. So I'm going to come. Yeah. If we didn't get a bounce this week with some of these earnings, then I think maybe I don't know what's going to really kick us up a notch. So I'm going to cut mine by a whole handle. I'm going to say 14.5. I'm still going to say higher than we are, but nowhere near as. I don't have the dire prospects for vol in mind that the Greasy Meatball does. But we shall see next week. That's why this show is so fun, and you all can tune in, listeners, after the fact and mock us royally, which is
we
the
need
fun of the show.
some entrance music for this game.
I've decided. A little quiz show
that
music?
and
Yeah.
where in the world is the meatball?
Maybe if you showed up at the start of the show, we would have your segment for you. They're ready to go. There you go. That's a little incentive for you to get here before 12:07.
Maybe something a little Italian-y. Where is the meatball?
Speaking of listeners, speaking of the meatball and time, it is indeed that time, listeners. As that theme music means our show is drawing to a close once again. I thank all of you out there for joining us live out there in the chat room. We love seeing you guys every Friday, noon Central, 1 p.m. Eastern. So make sure if you're around. I know it's middle of the day. It's hard for some of you, but tune in if you can. It's kind of fun. You can get it on the Mixlr website or on the MixLR app on any device pretty much you have out there. And stream along, laugh, make fun of the meatball like we all do here. It's a pretty good time. And before we go, really quickly, let me check back in with my cohorts here, my partners in crime on the Vol Views panel. See what they have cooking. We'll start with you, Senior Meatball. What's cooking in the land of Carmen Line and the Pit, aside from your VIX put spreads?
Things are nice at Carmen Line. We're still trading.
We're still trading.
Still trading.
That's a good thing,
hey,
right?
If I'm still trading. Thus, things are good. And at Option Pit, I did a webinar last night on using on hedging and on writing a wheel trade. Talked about PUT and BXY as well. You can go to optionpit.com/long-term. You scroll down a little bit, you can watch the replay of the webinar. For those listening live, I'm going to be on Bloomberg in about an hour and 20 minutes. You can listen in. I'm going to say for those of you that want to front run my awesome Bloomberg trade. I'm going to say by Visa June 80 calls.
Visa? They're pulling you far afield on
Visa card.
Yeah, well, I just saw my wife's credit card bill last month.
Oh, there you go. That'll inspire fear in the heart of any man.
Well, yeah.
Mr. Russell, what's cooking in the Institute as well as what's cooking with our friends over there in the land of CBOE and all things Live Vol?
Live Vol actually made an announcement. They're going to start doing some a la carte data.
Really?
They called it the Amazon. They're going to be like the Amazon of market
be the
data.
AWS of market data,
They
really?
announced that at FinTech yesterday. And for me, I'm going to, tomorrow, Saturday, I'm going to be speaking to the American Association of Individual Investors meeting downtown in Chicago at Paul.
American Association
AAII. And I'm
So you're going
also
to your AA meeting.
At my AAII meeting. And then I'm more in school mode than anything else. But we've got college programs coming up in May. We've got an Empowering Women in the Financial Markets panel next week at CBOE. And we are about a week away from announcing a pretty interesting panel discussion at CBOE where we're going to team up with the CFA Society of Chicago. Our buddy Matt Thompson is going to be on a panel talking about volatility. Yeah.
You might say that empowering women in check. This is about to be offensive. That empowering women panel may have broad interests.
Oh, there we go. You had to get that in one more time before the show. And with that, listeners, I will mute his mic. Don't worry. But thanks again to all of my listeners here, or all of our listeners for joining us live as well as, of course, on demand. We love all you guys out there. And, of course, surf on over to our friends over there at livevol, livevol.com to learn more about what Russell was talking about, getting the a la carte data, as well as maybe kicking the tires on that free demo. And on behalf of Mr. Corner Office and the Greasy Meatball, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And, of course, for sending in such great questions. We didn't get to them. We'll get to them next week, I promise. And we'll see you next time for more Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.